Avalanche price breaks February low, $20.07 in danger as ETF delay triggers bears. AVAX price update. Avalanche slips below February floor. Avalanche, AVAX, broke under February's low of $20.20, sliding below $21 to trade at $20.07, its weakest level in 3 months. Despite a 24-hour volume exceeding $568 million, sellers remain in control. Attempts to hold the $20.85 to $21 support failed, with price now approaching March's key low of $15.28. The price has now broken its short-term structure, increasing the probability of continued downside pressure. ETF delay and market mood drag AVAX and ADA. The SEC delayed Grayscale's AVAX ETF verdict to July 15, shortly after Van Eck launched a purpose-built institutional fund for Avalanche. Instead of boosting confidence, this delay shook sentiment, cooling prior optimism around institutional interest. Cardano, ADA, facing a similar delay, also witnessed drawdowns, showing that ETF indecision continues to weigh on Layer 1 ecosystems. The daily AVAX USD chart reveals a breakdown from a descending triangle pattern. Lower highs since April were compressing toward the $21 support base, which has now given way. The bearish continuation was confirmed by rising sell volume and failure to defend $20.50. If $19.50 breaks, the $15.28 level becomes the next significant support. The descending triangle confirms lower highs, and unless $22.30 is reclaimed, every rally remains suspect. Moreover, AVAX remains under all major EMAs, with the 20-day EMA at $22.55, 50-day at $22.18, 100-day at $23.15, and 200-day at $25.55, forming a full bearish EMA stack that reinforces downside pressure. RSI is now at 39.79, showing clear bearish momentum. The MACD histogram has deepened into red territory, with both the MACD and signal lines declining further apart, strengthening the downside confirmation. The bull-bear power, BBP, indicator has dropped to -4.44, its lowest level since April. This sharp dip highlights that sellers have completely overwhelmed any bullish strength, reinforcing that the current move is not just corrective, but part of a sustained bearish trend. Avalanche's DeFi TVL dropped from $1.581 billion on May 28 to $1.473 billion by May 31, a $108 million erosion in 3 days, reflecting capital flight and reduced protocol engagement. Exchange activity also supports the bearish case. Over May 30 to 31, net outflows reached $4.34 million, showing consistent user exits. More than 90% of AVAX holders are now underwater, with only 3.93% in profit. This highlights risk-off sentiment and increases the likelihood of further capitulation if support levels break. Conclusion: AVAX has now breached its February low and is heading toward March's $15.28 level. This confirms a bearish structure with potential continuation unless strong buyer interest emerges. The full bearish EMA alignment and momentum indicators continue to support downside pressure. If $19.50 fails to hold, AVAX could test $15.28 in the short term. Given ETF delays and heavy holder losses, the bearish trend may persist well into mid-June unless market structure flips decisively bullish.